So what if I told you that an internet joke about a dog, no less, could somehow turn into a multi-billion-dollar asset? Well, welcome to the absolutely wild, unpredictable, and kind of fascinating world of meme coins. This is where internet culture and high finance just smash right into each other. Okay, let's just pause on this for a second because this quote right here is everything. $85 billion. That's bigger than a lot of major household name companies. And for what? There was no business plan, no product, not even a vague vision for the future. It was just value, seemingly created out of thin air and pure, unfiltered hype. How is that even possible? To figure that out, we've got to go all the way back to the beginning. See, this whole thing didn't start in some fancy boardroom with a bunch of suits. Nope. It started, and I mean this literally, as a joke. So picture this. It's December 2013. Two software engineers, Billy Marcus and Jackson Palmer, decide to create Dogecoin just to poke fun at how seriously everyone was taking Bitcoin. And for years, that's all it was, a fun, goofy project. Its community was awesome, known for wholesome stuff like tipping artists online and raising money for charity. And then 2021 happened. And suddenly, the joke wasn't just a joke anymore. It was a multi-billion-dollar phenomenon. This massive explosion really created a whole new kind of asset. So let's define it. What is a meme coin? Well, unlike Bitcoin or Ethereum, which are all about the tech, a meme coin is all about the culture. Its value doesn't come from some groundbreaking new algorithm. It comes from the community, from a shared sense of humor, and from a tidal wave of social media momentum. And that brings us right to the engine that makes this whole thing run. If it's not based on, fundamentals or real-world use, what in the world is driving the price up? The answer is simple. It's the incredibly powerful and, let's be honest, incredibly unpredictable force of the crowd. And really, nothing shows this better than what people call the Elon Musk effect. A single tweet, a throwaway line on TV, and that was literally all it took to send Dogecoin's price to the moon. In this world, you have to understand attention isn't just a marketing tool, attention is the product. So what's going on in our heads during all this? Well, the psychology behind the hype is this potent cocktail of human behavior. You've got FOMO, that fear of missing out, that little voice in your head screaming that you're going to miss the next jackpot. Then there's herd behavior. You see a huge crowd running in one direction, and you just assume they know something you don't, so you run with them. And all of that gets amplified inside these social media echo chambers on Reddit and X, where optimism just becomes totally contagious. I love this quote because it illustrates how it all works so perfectly. A meme coin's popularity spreads just like a virus. It starts with a few people, then it gets picked up by a few online super spreaders who have massive followings, and then, boom, it goes viral. The hype literally infects the market. Dogecoin's insane success wasn't just a one-time thing. Oh no, it created a playbook, a kind of formula for turning viral attention into market cap. And you can bet that countless other tokens were going to try to follow that same formula. You can really see the evolution here. First, you had Dogecoin, the OG joke. Then, in 2020, Shiba Inu came along, and it was a lot more self-aware. It actually branded itself as the Dogecoin killer. Fast forward to 2023, and you get PEPE, a coin that has zero pretense of being useful. Its entire reason for being is just to be a pure celebration of meme culture. And speaking of PEPE, just look at this number. That's its total token supply, 420.69 trillion. The numbers themselves are memes. This isn't finance trying to be funny anymore. This is humor literally being turned into a financial asset. It's wild. Okay, so we've talked about the why, the culture, the hype, all that good stuff. But let's get into the how. How are these thousands of different tokens actually bought and sold, especially when they're brand new and don't have a lot of trading activity yet? This question really gets to the heart of the tech behind it all. I mean, think about it. In traditional finance, like the stock market, it all works by matching a buyer with a seller. But on these decentralized exchanges where meme coins live, you might be the only person trying to buy at that exact second. So how does a trade even go through? The answer is something called liquidity pools. You can basically think of them as these automated, robotic market makers. So instead of finding another person to trade with, you just trade against a pool of tokens that's locked inside a smart contract. This is the engine, the core technology that lets this entire ecosystem work without needing all the traditional middlemen. So here's how it works in practice. It's actually pretty simple. Let's say you want to swap your token A for some token B. You go to a decentralized exchange, and it connects you to the right pool.
You put your token A into the pool, and the smart contract automatically sends the right amount of token B back out of the pool right into your wallet. The price updates instantly based on the new ratio of tokens left in the pool. No middlemen, no order books, no waiting around.
All right, so we've seen how they get started and how they're traded, but beyond all the fun and the cool technology, it is absolutely crucial to talk about the very real financial risks that are involved here.
To really get a handle on the risk, you have to understand the volatility. And look, if you think stocks can be volatile and that Bitcoin is even more volatile, well, meme coins are on a completely different planet. These things can have these insane price swings, up or down, in just minutes, driven by basically nothing more than a change in mood on social media. And beyond that extreme volatility, the risks are pretty significant. There's often no real underlying value to soften the blow if the price crashes. And because this whole space is mostly unregulated, it's a breeding ground for scams and manipulation, like rug pulls, where the creators just disappear with everyone's money. All the research shows this puts younger, less experienced investors in a really tough spot. So after all that, we're kind of back where we started. Can memes actually move markets? Well, the evidence seems pretty undeniable. Yes, they absolutely can. They can create and destroy billions of dollars in value based on little more than a collective inside joke. The real question, the one to chew on, is what this bizarre new world, where belief can be more powerful than a balance sheet, really means for the future of finance.